They really provide a framework to systematically embed sustainability across all levels of a financial institution. So from banks, from their strategies, from their portfolios to transaction levels across core areas of the business. They set a global benchmark to really see what it means to be a responsible bank. This is really about redefining the role of the banking industry in helping to shape the sustainable future for society. So what they actually are, you may have seen some of this already. The first principle that the banks have committed to, that's over 130 banks with around 47 trillion in assets already committed to these principles. They have committed to aligning their business strategies with the UN Sustainable Development Goals and the Paris Agreement on climate change, as well as regional and national frameworks. They have committed to setting targets to address their most significant positive and negative impacts in core areas of their businesses across activities, products, and services. And they have committed to working responsibly with clients and customers to promote sustainable economic activities and practices. They'll be consulting, engaging, and partnering with stakeholders responsibly, so that includes regulators, civil society, and others who are key to the transition to a sustainable economy. And they will be implementing the principles through effective governance and a culture of responsible banking. It's already been said today how important governance will be, and that this really needs to be run throughout the bank from at all levels of the system. Now, to make sure that there is progress in implementation, there is an accountability part of the principles, Principle 6, where banks commit to reporting on progress. And this is, of course, very important. And within 18 months, you'd be seeing the first reports from banks on how they are actually implementing the principles. So one of the first steps that the banks will need to take is to identify impacts, the positive and negative impacts across their businesses. And this is in order to then set targets in the key areas of the business. So it's really looking at how can they align their business strategies and their targets with the areas that matter most and where they can make the biggest difference. Of course, target setting will need to focus on how to align with the Sustainable Development Goals and Paris Agreement, so they would need to set at least 2 targets. So it could be climate, of course, but it needs to be other areas as well. The targets need to be specific, measurable, achievable, relevant, and time-bound. And although the banks are expected to set targets individually, they have actually already committed to collective climate commitment for action. And that includes ING, Standard Chartered, and Triodos Bank have been among 32 banks that have committed to aligning their lending portfolios with the Paris Agreement. So going well below a 2-degree trajectory and striving for 1.5 degrees. Of course, the real test will be implementation. And within 2 years, UNEP FI will be publishing a stocktake of the first look at collective progress across the signatories to the principles and to see progress.